Hey, Bitcoin wealth builders, Simon Dixon here, and welcome to episode 91 of Bitcoin Hard Talk. As always, we got a bunch of stuff to cover here today. We're going to be covering everything that happened this week in Bitcoin, this week in macro, this week in geopolitics. This is hard talk about hard money and the implications that it has in the real world as we prepare you to transition for this world of AI, central bank digital currencies, and of course, Bitcoin as a peaceful resistance to protect yourself and opt out of the system that is being built. And we had lots of updates this week. We had the Genius Act pass, and it was signed by Trump. But I had a little bit of time to dig deeper, and we're going to be answering the question: does the Genius Act enable a covert central bank digital currency? We're going to discuss that and more, and the impact in macro and geopolitics. If we have not met already, my name is Simon Dixon. I spent the last 25 years of my life obsessing over the topic of money, investing, and I combined that with geofinance. And when Bitcoin came along, I've been there for the last 14 years, helping people understand the importance of owning more Bitcoin each month. And I'll be reiterating the importance of that throughout, as well as all the news that happened this week, and tie it into educational pieces, so that each week we're smarter and more prepared. And I'd like to get as many people to be smarter and more prepared as possible. So in part one of this show, This Week in Bitcoin, I'm going to be digging deeper into all the news that happened this week, but also answering the question: does the Genius Act enable a covert US central bank digital currency? We'll be answering that. In part two, This Week in Macro, I'm going to be going into Trump's humiliation ritual at the Federal Reserve with Jerome Powell, what it means and the implications for the wider macro, and also why war profits are soaring at the moment. And I'm going to answer the question with a blog that I posted this week for those that want to do more details on who really rules the world, and specifically who's behind the Proof of Weapons network. We're going to be covering all of that. And in part three, This Week in Geopolitics, we're going to be going through basically who's really profiting from all of this surveillance that we are ushering in and all of this war that we are ushering in. I'm also going to be covering the latest on the China-Taiwan situation and the Russia-Ukraine situation, as well as a few tidbits from what's happening in the Middle East. And I'm going to leave with one final thing. It's going to be a packed show. And we're going to be leaving with the final step on what you can do in order to boycott much of the war that I call the Proof of Weapons network. So without further ado, let's jump right into part one, This Week in Bitcoin. There was a study that came out today, which was very promising. I've been encouraging people to boycott the Federal Reserve by saving in Bitcoin for the last 14 years. And I've also been encouraging them to do it and hold it in self-custody, so you can boycott the asset managers like BlackRock as well. And the more Bitcoin we have in self-custody, the better. Because there was Operation Choke Point 2.0, which was a very deliberate operation in order to allow the traditional financial players to persuade you to own as much of your Bitcoin with them so that they can profit and benefit from it and make themselves more powerful as they take over states and countries and manage this transition over to this multipolar world, with Bitcoin being the peaceful resistance. And many of the traditional financial players want to get you to own your Bitcoin with them instead of you owning it in self-custody. But the report showed that approximately 74% of all Bitcoin is now held by long-term holders. Now, that's a range of a self-custody and custody. But when you analyze the blockchain in terms of individual holders that are holding and have held for the long term, this is a 15-year high, which is very, very encouraging. So Bitcoin is really on the right track, but that doesn't mean we should get complacent, because all the newbies, they're going to be offering all sorts of incentives for you to hold your Bitcoin with them in custody. And if you didn't have a chance to read my blog where I did a debate on custody and self-custody, make sure you head over to simondixon.com and check it out. You can watch the long form debate, or you can watch a little AI summary just in case you haven't got the time to do it. I understand I give you a lot more. But also, what is very encouraging is one of the early 2011 addresses. This is when I first presented at the first Bitcoin conference, and I started writing my book in 2010. That was also the first published book in the world to include Bitcoin. But there were 80,000 Bitcoin that moved from one of the old 2011 addresses. Now, at today's value, that's approximately $9 billion. And this week, they were sent over to Galaxy Digital. And what is remarkable is that they were either gobbled up over the counter by people that were trying to persuade people to either sell those 80,000 Bitcoin or transfer them into some kind of trust structure or something more tax efficient for that billionaire. But what is interesting is it did not barely move the market at all. On the day, Bitcoin was down just 4%, which is very, 4% off the all-time high. So an 80,000 Bitcoin sell worth $9 billion has the demand. And that is how far and how liquid this market has become right now. At the same time, Trump Media, his public company on the New York Stock Exchange, or is it basically said that they've disclosed that they now hold that $2 billion worth of Bitcoin. And they're doing it through both Bitcoin and Bitcoin-related investments. So I'm sure they're using their leverage in their position to own mining companies and various other parts of the ecosystem and doing lots of backhand deals that we've been covering. But anyway, $2 billion in Trump Media, taking essentially a social network that only the craziest MAGA fans probably use, and turn it into a Bitcoin treasury company, as well as other strategic assets related to the Bitcoin sector. So that's approximately 2/3 of the $3 billion in liquid assets that Trump Media holds is now held in Bitcoin, which is, a 66% treasury position, which is very, very bullish of Bitcoin from the president of the United States, which essentially is a short dollar trade, which is very interesting, especially as he's launching stablecoins through World Liberty Financial that benefit from higher interest rates at the same time as advocating for the short-term interest rates. But in the macro side, we'll be going through the humiliation ritual between Trump and Jerome Powell. So in terms of the public companies that are now holding Bitcoin, and by the way, I always need to reiterate this if you're new to the show, I don't recommend anyone should be buying Bitcoin through these public companies unless there is a very specific reason. Maybe you've got pension money that you can't unlock, and maybe they don't allow you to buy a Bitcoin ETF or anything like that. And so therefore you need exposure in your country. And so therefore you go via a Bitcoin proxy, which is what a lot of these treasury companies are doing. They're raising money on the debt capital markets to give corporate bond investors the ability to get exposure to Bitcoin. Then they're raising that money and buying Bitcoin in these equity capital markets. Therefore, those that need exposure to Bitcoin but can only do it via these mechanisms are able to get exposure. For the average person, Bitcoin in self-custody is where we need to get to. But I understand if there's a bit of financial planning around that. But Strategy, which is the largest publicly traded Bitcoin proxy, which has both an operating company and a Bitcoin treasury, now owns 770,000 Bitcoin. So that's approximately approaching 608,000 Bitcoin. Approximately, what's that, about, just got over 1% of the supply. And now when you take that in comparison to, we're talking the largest companies in the world, the tech magnificent seven, the largest companies listed on the US stock market, they're now in the top 10 as in terms of value of their treasury, which is absolutely remarkable. It's just showing what Bitcoin can do to a company. And so Strategy now holds approximately $71 billion worth of Bitcoin. Obviously, that changes. Now, in terms of public company treasuries, that ranks Strategy, the ragtag software company, In terms of the Standard & Poor's, the 500 largest stocks in America in that index, it's now got the 9th largest treasury in the world. To give you context, the largest treasury, and treasury just means the amount of money that these public companies hold on reserve. Berkshire Hathaway, who has been selling down their Apple stock and deleveraging, and now has $410 billion in their treasury. Now, treasury means that it's cash equivalent. You either hold it in US dollar treasuries, i.e. lend it to the US government, or you hold it in gold, or you hold it in Bitcoin now as well. The second largest treasury on the S&P 500 is Amazon, that holds $157 billion. The third largest is Google, $148 billion. The fourth is Microsoft, $132 billion. The fifth is Apple with $131 billion. Sixth is Ford with $105 billion. Then you have Tesla with $95 billion, of which approximately $1 billion or so is the Bitcoin position. Then you have General Motors, $89 billion. And ninth in terms of the S&P 500 is Strategy, with, at the time of this, the Bitcoin strategic reserves were valued at $77 billion. The price has come down a little bit since then. So it just shows that just through using these mechanisms and holding Bitcoin in treasury, you can outperform all of... Now, remember, this is somebody that came to the market in 2020. I always get this. It's too late. I missed the boat. Bitcoin is a fixed supply. And so he's still buying the top, and he says he'll be buying the top forever. And that is what I've always been teaching ever since $3 to today, that you earn fiat currency, you save it in Bitcoin, and historically, everyone that's done that for 4 years has outperformed all the fund managers, everyone on Wall Street, gold, real estate, every asset class. And when you price any asset class in Bitcoin, they've all been in a bear market relative to Bitcoin, because people have this illusion. When you price things in fiat currency, which are depreciating, they lose their store of value, they lose their value over time. It looks like stocks and real estate are going up in value, but they're actually debasing the currency. So if you want reality, price things in gold and price things in Bitcoin, and you realize everything's in the bear market relative to Bitcoin, particularly in Japan. And we've covered this many times. But what is, Japan had its treasury company that got record volume, again, by holding Bitcoin on its balance sheet for Metaplanet, rather. But now there's more Japanese companies that are jumping on the bandwagon. And where this becomes interesting is you've now got a Japanese AI company. It's called Quantum. And it is planning to buy $356 million worth of Bitcoin in the next 12 months. So this is an aspiring artificial intelligence company that is also going to be using Bitcoin as its strategic reserves. And I think you're going to see more and more of this, just as the Bitcoin mining companies are also repurposing some of their data centers. While they're mining Bitcoin, they're also providing compute for artificial intelligence. And companies like Core Scientific are doing that, which is why it was acquired for approximately $9 billion by CoreWeave and various other data centers, as we start to enter into this world of Bitcoin, AI, and central bank digital currencies. And all of those are moving forward. Now, the CBDCs are tools for oppression. Artificial intelligence is here to take your job, and Bitcoin is here to protect you from both the surveillance, it's money you can own without a bank, money you can spend without government permission, and money that has a fixed supply, so you don't need to worry about what the central banksters are doing, as I'll be covering this week in Macro. So it adds simplicity to your life, so you can figure out how to earn more fiat currency and adjust to this artificial intelligence world, and then save it in Bitcoin, knowing that you don't have to mess around with the markets, and you can just watch Bitcoin Hard Talk every week, make sure you're up to date with what's happening, but simplify your life. And even if you want to go more advanced, you can do that with the information I'll be sharing. But everybody can have the simple strategy, and we all need more simplicity in this environment where we're moving towards exponential change. Humans are not set out for exponential change. We are in for the most changing time in human history ahead of us with all of this artificial intelligence and robotics. And Bitcoin is designed to give you some simplicity so that you don't need to spend all your time figuring out how to hand over your money to Wall Street. And the fixed supply means that you've got that commodity-like feature that once you understand Bitcoin, you don't really need to understand anything else. And not only are we seeing artificial intelligence companies putting Bitcoin on as a treasury on their balance sheet, we also are starting to see more and more gold mining companies that are putting Bitcoin as their treasury. So while they're mining Bitcoin, while they're mining for gold, they're taking some of those dollar returns and they're converting them to Bitcoin on their treasury balance sheet. This really is a play of digging gold out of the ground and converting it to Bitcoin as we enter into this world of hard money. And many Bitcoiners don't like gold. I'm a big fan of gold as a physical scarce asset. But Bitcoin's the ultimate because then you can use it. It doesn't suffer from some of the problems of storing it without holding it with a custodian, because you can self-custody it and you can transport it around the world. And if your jurisdiction gets very oppressive, currently like the UK is doing, we're going to go a bit more into that, then you can exit the country with your wealth and it will come with you without having to physically store that value, and you can audit it on the blockchain wherever you are in the world, which is remarkable. And more people are discovering that. Now, of these Bitcoin treasury companies, these public companies that are there's over 100 of them now, and people are tracking them all. From the top 100 Bitcoin treasury companies, which I've warned everyone against, it will be used as a psyop for those that control the money printers to engineer the game to fool you into selling your Bitcoin. I'm not going to go deeper into that. You can check out previous videos. I catalog them all on my YouTube channel, break them up into smaller topics so you don't have to watch the whole thing. But you can start to go back and pick out the topics you like as well. But now these Bitcoin treasury companies, in just a small period of time, they now own 853 Bitcoin just in the top 100 treasury companies. So it is eating the stock market, and it is demonetizing dollars as treasury asset reserves after Strategy kind of led the charge. At the same time, America's moving into a deregulation environment under the Trump administration. I've got lots of criticism for the Trump administration, as we'll be covering in the macro and geopolitical section, just as I did for the Biden. I don't care about party politics. I just care about you protecting yourself and making yourself great again, because they ain't going to make America great again, and they're not going to make your country great again. When you understand how the proof of weapons network works, you'll know that governments are subordinate to corporate interests. And we'll be going to dive more into that today in part 2 and part 3. But in terms of this deregulation environment, the FBI has now dropped the investigation under the Biden administration into Kraken. This is because Operation Choke Point 2.0 under the Biden administration, with Gary Gensler as head of the SEC and Jerome Powell as head of the Federal Reserve, and Biden as head of the government in the United States with the Democrat administration, they executed an operation in order to take down, through planting SBF into FTX and Mijinski into Celsius, ways of stealing a lot of money, crashing the market, taking out the crypto-friendly banks like Silvergate, Signature, and Silicon Valley Bank, and then allowing BlackRock to get the Bitcoin ETF approved so that they can fool you into getting as much of their Bitcoin held with them, rather than you holding it in self-custody. Fortunately, Bitcoin is proof of work, so it doesn't matter who owns it in terms of controlling the network. But anyway, during this, they came after all the crypto exchanges. Full disclosure, I'm an early shareholder in Kraken and over 100 different Bitcoin companies before the vulture capitalists and the financial terrorists came along. It was a grassroots movement where we were funding the companies. I invested in Kraken as a very early investor. They're about to go public now, so you'll be able to invest on the public markets. But now the FBI has launched the investigation into the founder, Jesse Powell, who was at the very first Bitcoin conference in the world, a Bitcoin OG that dedicated his life to, exposing the financial weapons of mass destruction and various other surveillance state tools, as was this bottom-up movement in Bitcoin against the banks. But they've now dropped the investigation as well. So congratulations, Jesse Powell and the team at Kraken. Now, in 2016, I also became a shareholder in Bitfinex because I helped the victims of a hack, 119,000 Bitcoin that was hacked, and turn their whole into shares in the company. And so I became a shareholder in Bitfinex as a result of that, as did many of the other victims. But the sister company, Tether, who created the largest stablecoin in the world, that has now led to all of these changes in Genius Act that we'll be covering, and have about $165 billion behind that stablecoin. They're now planning, after being targeted by the US, and there were many targets by the US. I remember many of it when they seized funds of Tether. That created a hole, and they had to launch a token that was backed by the return of coins and all sorts of financial engineering that needed to be done to survive. They survived. They did. But they ended up having to store, their treasuries with financial terrorists like Cantor Fitzgerald, headed by Howard Lutnick in the Trump administration, the neighbor of Jeffrey Epstein. You don't even want to go down these circles. But anyway, they're holding their treasuries with the Federal Reserve discount broker. And obviously, recently they came into the White House, and now there's this large crypto lobby. There's all the usual types of shenanigans in games. This is why I just focus on Bitcoin and self-custody. I'm looking over time to, as these companies go public, I'll be selling down my shares and converting it into Bitcoin. I don't want to be involved in all these human risks. My job was done to support the industry where it's needed. Now it's a massive industry, and I feel my focus is on getting people to own Bitcoin and self-custody. But anyway, Tether is now planning to launch a US version of the stablecoin because of the Genius Act and the regulatory structure. So they're going to have a two-tiered stablecoin. It's like a US-based stablecoin, and then Tether as we know it today. So we'll see what that actually means. So with that, I want to go through what was actually in the Genius Act. So it was pitched as America becoming the crypto capital of the world. But anybody that's following me for a long time, you know that America is converting into a regional technocracy for artificial intelligence and robotics. And based upon the structure of the proof of weapons network, it is subordinate to the asset managers and BlackRock's interests. And so the government no longer works for the American people, just like we saw in UK and Europe and various other jurisdictions that I'll be covering more in the macro. But it needed stable coins in order to create what I believe is a covert form of central bank digital currency. Now, part of the bills that was passing, there were three bills. There was Genius Act for stablecoins. There was Clarity Act for deciding how you register with the various regulators. And there was the Anti-CBDC Act. Now, the Anti-CBDC Act, as I covered in previous episodes, was about making sure that Congress, if they wanted a CBDC, it would have to go via Congress. And so you can stop a CBDC happening via Congress. But as with America, and as the Constitution was designed, it was always designed to protect Americans from the tyranny of government, but never the tyranny of the corporations controlling the government. So it was always a covert mechanism for having rule by a corptocracy. And now all those corporations have become in technology. It's a technocracy. But the Genius Act was effectively meant to kill the CBDC. And you had PR and propaganda. This week, there was someone from, what was his name? Bo Hines that came out and said, yeah, this kills the CBDC. And that is actually true. It has to go via Congress in order to achieve it. But what it does is it forces stable coins into some kind of compliance and control structure, like a central bank digital currency, but issued by the banks and non-banks. And it separates those into two. So it is functionally identical to a central bank digital currency, with the exception of monetary policy. So many people talk about the Federal Reserve creating money, and it does through quantitative easing. But primarily, money is created by the private banks. And that's why the banks met on Jekyll Island in order to construct the Federal Reserve System, so that it could have a lender of last resort for bank failures, so it could socialize losses, privatize gains, create a moral hazard, as we saw in the 2008 financial crisis, but also be able to create the digital dollar every time they issue a loan in a debt-based Ponzi scheme that guaranteed that individuals, governments, and corporations would have to go into ever-increasing levels of debt, and then they could use those debt capital markets to manipulate the equity capital markets and effectively create what America is today. $37 trillion of government debt, massive consumer debt, and corporate debt that is utilized by large corporations in order to pump up their equity prices so that they can enrich themselves. And it's crony capitalism to the highest level, because it's all guaranteed by the government and the Federal Reserve System, which has these deposit insurance for only 1% of the deposits. Essentially, the central bank digital currency is a private bank digital currency. But because the technology companies and fintech companies and Tether and Circle, full disclosure, was another company I invested in, started as a Bitcoin company and then later became a stablecoin company, and is now public as well. It went public recently. You essentially had these private corporations that can issue central bank digital currencies. They're backed by US debt. They work on a one-to-one basis rather than fractional reserve. So they don't create digital dollars every time they issue a loan. They create digital dollars every time someone deposits a dollar. And then they use that dollar to buy treasuries, which is lending it to the US government. And so it created this mechanism whereby you can have full reserve banking outside of the banking system, but also is backed by US government debt. And obviously, these are centralized companies. It's not like Bitcoin. So you have to opt into all the surveillance and the ability to freeze funds and everything that now the Genius Act, the Clarity Act, and the Anti-CBDC Act will require, particularly the Genius Act as well. And so you have functionality identical to CBDCs, but you don't have the centralized control by one central bank. In effect, this hands over control to Treasury rather than independence by the central bank. But the technocrats and financial institutions still get to create the digital dollar. The government gets to borrow, but the Federal Reserve System is a two-tiered system. You have full reserves with stable coins, and you have fractional reserves, and you can use essentially the collateral of the funds that you hold with the Federal Reserve System using these stable coins. And that is what the Genius Act achieved. Now, I know that that's a bit of a mess up in your head. Only for someone that's been studying these things for a long time might understand those. But I'll go a little bit deeper. I know it's a little bit geeky, but the devil's in the detail, because many people think that this is about giving people more freedom. No, it's the exact opposite. It's about this two-tiered system where BlackRock controls the European Union and actually has a digital euro and central bank digital currency, while having a technocracy in the host of the largest capital market, America. And then you usher in integrations with Palantir, AI, and the surveillance state. And you only resist by holding your funds in Bitcoin and limiting the amount that you put in a bank or the amount that you use with these stable coins. But the difference is that a stable coin is created by a bank and a non-bank financial institution. And so this was a regulatory regime for those banks and non-banks. And of course, there was the crypto lobby that was pushing through favorable regulations for stablecoin issuers. And there was the banking lobby that was pushing through favorable terms for banks over stablecoin issuers. And guess what? The banks won and the stablecoin issuers won. And there is this power struggle between the technocrats, the technical industrial complex, and the financial industrial complex factions of the proof of weapons network. And so the very few discussions, and I was invited, I did a space this week with George Gammon. I've been on his show many times in the past. Well, once in the past, actually, not many times, but came up on some of his spaces. And I'm going to be doing another show with him next week. I was invited to join him on his podcast. But the thing that very few discussed, and I had to bring it to many people's attention, is that there is essentially a new monetary system that was negotiated into this Genius Act. Because under the Genius Act, there's a few things that people didn't notice, and only a geek like me would dig into these things and start to think about the implications. Of course, the banks knew, but they're shadowy behind the scenes, rigging the system in their favor, which is why when people talk about, I've always said central bank digital currencies and stable coins, they don't compete with Bitcoin, they compete with bank deposits. And the banks are having a two-tiered game here based upon this evolving new system, because you can have one surveillance system and one shadowy fractional reserve system to maximize profits. But there was a clause that very few people were talking about, and that is that banks in the Genius Act can now use their reserve balances that they hold at the Federal Reserve. So every bank that has a clearing account with the Federal Reserve, they have to hold the reserves. That's why it's called fractional reserves. But those reserves are not held in cash, they're held in assets. And so really there's no reserves because it's held by assets, which is a loan to the government. And that's all backed up by the credit, the credit worthiness of the government that is increasingly being downgraded by S&P, by Moody's, and the various, and Fitch and the other credit rating agencies. But now they can take the balance that they have with the Federal Reserve, and they can collateralize it in order to back a stable coin. And so this is essentially, it means that about 17 years after these Basel reforms of trapped bank reserves that was meant to make the banking system more stable, is going to be able to be unlocked by turning it into a stable coin. So this essentially releases approximately $3.5 trillion of additional liquid capital, which will be acting as a stimulus, because essentially money at the Federal Reserve becomes part of the broader money supply. And that was injected into the Genius Act. And it means that banks immediately get to issue these stable coins and kind of get a head start in the industry. And under Genius, basically that collateral, once you issue a stable coin against it, it cannot be rehypothecated in order to protect the integrity of it. But remember what we've seen in stablecoins. Stablecoins are pegged to the dollar because the asset is worth $1. And you can take the loan to the government that pays yield, as in bonds, and Tether, for example, converts it all into Bitcoin in order to get more Bitcoin. And that's the business model. But you can't rehypothecate these funds. And so you get an additional yield by pushing out these stable coins, which is less profitable than the fractional reserve. So what is it that they're actually after? Well, they're after the programmability and the surveillance that you can put in there, and making sure that they have a head start over the traditional fintech non-bank stablecoin issuers as well. So anyway, in the Federal Reserve account, they can hold either treasuries or reverse repos and repurchase agreements, which I don't want to go too deep into. But basically, they can issue their stable coins based upon having that backing. And if there's any distress in the repo market or in the treasury market, Now, normally they hold those to maturity, so it doesn't matter if there's any fluctuations. But when people want to redeem those stable coins in a moment, you can essentially have a run on the stable coin. And you may eventually, with these banks, package that up into the FDIC system, which means socialize the losses and privatize the gains as well. So it's adding essentially additional risk into it when it could have just been a demonetization tool for the banks. Because if you transfer it from your bank deposit to a non-bank, then that money is moving from fractional reserve to full reserve. Instead, they gave the banks essentially an effective monopoly by having these Fed accounts that can be converted into stable coins. Now, once it is a stable coin, it can't be used as collateral anywhere else. They can't use it again on their balance sheet, which banks get to do with their double accounting fractional reserve banking. But it means that you have that stable coin, and it becomes an integral part of the money supply. So now stable coins are effectively deeply integrated into this system. And obviously the government wants to perpetuate more dollars out there so that it can back it by more debt. And you effectively have a form of modern monetary theory so that the government gets bigger and bigger and bigger, and the banks can profit from it, but the Federal Reserve is no longer needed in that mechanism. And you can manage a phase out of the Federal Reserve system and full control into a stablecoin standard backed by US government debt, which is a form of modern monetary theory, but handing over the interest directly to the banks as well. So they could see that the writing was on the wall, and they quickly transferred it into another debt-based Ponzi scheme, while we have these stable coins that are full reserve. Anyway, bank reserves are currently useless, and now they can be useful. So you can imagine that. Currently with bank reserves, they're currently used to clear settlements between each other. So if you have one bank that has more deposits and reserves than withdrawals, then you can clear between each other. And if they need access to fast cash, you have these products like repo markets where they can lend to each other. Currently, on average, less than 100 billion is needed on a weekly basis to handle settlements from these actual reserves. So they'll keep some of it in reserves, and then they can use it to issue the stable coin. This is essentially turning their bank reserves into stable coins, which unlocks that $3.5 trillion of liquidity and that was stuck inside the Federal Reserve System. Now, you can imagine that this will lead to a surge in digital liquidity that will be used in likelihood to pump the Bitcoin market as well. And so what I want people to understand is that we're benefiting from a two-tiered system in Bitcoin. While the banks and financial institutions are trying to catch up with Bitcoin and they're trying to use this technology to build the new rails, your job is to end up converting your stablecoin into Bitcoin and holding it in self-custody. So you can benefit from the fact that banks are pumping in new liquidity that eventually will replicate the same system that will create the demand eventually for those that have these Bitcoin equivalents and IOUs to need to convert them into Bitcoin in self-custody that is backed by real Bitcoin. And therefore, that creates kind of a short squeeze if they start engaging in these types of short-term manipulations. They will not be able to take a fixed supply asset, and the self-custody Bitcoin will be a two-tiered economy in the IOU Bitcoin that the banks will be messing with as well. And so they get these additional liquidity through stablecoins without actually having to issue new loans, create new dollars, and have to take on the credit risk of the traditional bank lending model. In effect, this is a functional money supply that's kind of operating within a shadow quantitative easing style of structure that is essentially a covert stimulus. Hence why the conclusion is that Genius Act has enabled a stimulus and a quasi-covert central bank digital currency controlled by the technocrats without the central bank and without centralizing it fully like they are in Europe and like they're planning to do. And so, this is an improvement, but you just need to be aware to limit your exposure and why, in the end, it's a two-tiered system. As the banks are levering up, a bunch of liquidity is going into Bitcoin that want to protect themselves. And when banks collapse, or when banks hit an over-leverage moment, or we have a next black swan event, Bitcoin is the solution. But you won't be able to convert to Bitcoin during the crisis. So your job is to manage that, which is the whole point of money you can own without a bank, money you can spend without government permission, and money that has a fixed supply when they go through these different types of risks, because the stable coins will be backed one-to-one by US dollars or treasuries. And so this is a shadow system through the stablecoin market, and the banks needed to do this in reaction to the alternative, which is people convert their bank deposit into a stablecoin, and that creates a run on the bank. And so again, crony capitalism, but everybody in America is saying, yeah, we're winning. You got to be aware of how the devil's in the detail as well. Right, a few more things that came out in the details in terms of what they put in there was a prohibition on paying interest and rewards from those stable coins unless you are a registered bank. And so basically, this means that banks are able to pay yield on their stablecoin, while stablecoin issuers like Circle and non-bank institutions, they're not able to pay yield on their stablecoins. They have to be registered with them, but in order to pay the yield, they basically have to register as a bank. And so, even if you're issuing stable coins from a bank and through their affiliates, you're still not able to do that as well. So basically, this is a mechanism for stopping non-banks competing with traditional banks to prevent people wanting to convert their bank deposits into stable coins, and give the banks the ability to do that within their control structure, which is anti-consumer protection, but again, crony capitalism to the highest level, and why it is a covert CBDC as opposed to switching and taking on the banks with stable coins. This was the banking lobby in full swing, and everybody just signed up to it, and very few people actually went into the detail and noticed it. So this really helps the big banks and the banking system adjust to this, and it also pressures stablecoin issuers to essentially get a banking license. And once they get a banking license, they can offer those lending services, and then they can lever up. So this is a way of gobbling up the stablecoin issuers into the banks that will probably be pushed through mergers and acquisition. And another example of how the Trump administration essentially works for the banks via the bank lobby. And that is the same with Biden. This is bipartisan. Any long-term listener will know that by now. They just want you to think that it's the Republicans versus the Democrats, as we always come. But this helps protect the current banking system as we move into a more digital, a more tokenized economy. And you can bet your bottom dollar, BlackRock is looking to do some of the tokenization alongside with this as well. But by pushing the stablecoin issuers like Circle, but to be a bank, you can essentially, they can get access to Federal Reserve accounts by applying for banking licenses. And by having an account with the Fed, it means that they end up being able to create that faster, more convenient technology without needing the bank in the middle, because they become a bank and they can have access to those reserve accounts. This is regulatory capture. This is protecting the existing system, and this is dressing up a CBDC into an acceptable narrative via the stablecoin market without the control handing over to just one institution, the Federal Reserve. Hence why you had these little theater battles that we'll be covering this week in macro between Trump and Jerome Powell as we make these transitions. These games are being orchestrated from the top, and you're meant to believe that this is MAGA. And once you understand that it's not, you can stop wasting your time with politics. And in part 3, I'll be covering where you should be implementing your time if you want to really make a difference in the world. Anyway, so non-bank institutions will be registering with banks, and then they can settle directly. And what system do they have to settle directly? FedNow, which is a central bank digital currency, which they said only a central bank digital currency needs to go via Congress, with the exception of the one that's already launched, and with the exception of the stablecoin issuer that is not a member of Congress, which is Trump through World Liberty Financial. Crony capitalism at the highest level anyway. So as more and more tech companies start to act like banks, this is the part between the technical industrial complex, the financial industrial complex is getting more blurry as well. So as we continue to watch this, I'll be covering the detail every week, as I always do. And if you like these details, make sure you subscribe to the channel. Let's take a look at some of the other things that are happening around the world so that we can recognize that this isn't just a US play. This is a global play. So in reaction to this, Ghana has basically officially launched their license regime and regulatory regime for crypto platforms. There are virtual asset service provider regimes that are following the Financial Action Task Force, which is a way of the US controlling different parts of the proof of weapons network by basically harmonizing these digital dollar regulatory structures. But the interesting part comes not from the digital dollar, but the resistance against the digital dollar and the opportunity it gives to countries to basically become more sovereign by building their own Bitcoin strategic reserves and payment systems based upon their own country goals. This is a resistance to free yourself from it. Now, what did we have in the UK? Now, the example of what happens when you are not free from the proof of weapons network is what is happening in the UK. The UK is the beta test disaster case of all disasters. And our finance minister in the UK, I left the UK in 2015. I could see where the country was going. But Rachel, was it Reese? Yeah. Basically was pushing out, and I'm not sure whether this is fake news or real news, but there was articles that were pushing out that one of the strategies for figuring out how to survive their debt crisis is to selling the $5 billion of Bitcoin that the UK has in order to plug some of the hole. This is just a mechanism of the UK and European strategic weakening campaign that I've been covering for months as a result of the economy being fully vassalized into the proof of weapons network, where essentially the UK is just a node for the proof of weapons network that currently has BlackRock as the current CEO, as it were. But at the same time, the UK was making announcements. Remember, UK's strategy, they said, we're going to do AI. But what does that actually mean? What they actually mean is that they're integrating government data into artificial intelligence, and because they don't have the cheap gas from Russia that they need in order to power this artificial intelligence, because they're buying the expensive gas from America, which is why the proof of weapons network invested heavily in creating the Ukrainian war so it could profit from the war and strategically weaken Europe by antagonizing the Putin escalation. And we'll be covering more of that in part 3 on the geopolitical section and how the Ukraine-Russia war is benefiting the proof of weapons network and who's profiting from it. But anyway, now the UK government is handing over all of that data over to OpenAI, so that it can start building software and artificial intelligence for the Department of Education, the Department of Defense, the Department of Security, and the judicial system and the Department of Justice. A partnership with OpenAI that will later be integrated into the proof of weapons network that has the backdoors through the NSA into Palantir and the surveillance system. UK is just simply a node operator for this network as we transition into this command and control technocracy of central bank digital currencies, with the Genius Act and stablecoins experimenting with these different models. So on top of all the Palantir surveillance that the UK already signed up to in the Department of Defense, in the National Health, they've basically already built, they're now doubling up on OpenAI, and it basically said that OpenAI and UK will have signed a deal to use AI in public services. This requires massive amounts of energy, and this is going to be powered where? Because if UK was acting in its own self-interest, Europe needs cheap gas from Russia, which is why this was always an operation to destroy essentially European Union, big Germany, and the European Central Bank, destroying Germany's manufacturing base by it not being able to access either its nuclear energy or its cheap gas needed, which wiped out Europe and vassalized it into the private equity industry that is securing the country on cheap, while sovereign wealth funds in Qatar and various other regions are acquiring more and more assets as BlackRock also acquires more and more assets for their portfolio companies in order to fully control the region and use the government as a lobby tool for the interests of their profits rather than the interest of the people. So there is going to be global energy shortages worldwide for all of this artificial intelligence, which is why I believe, and I've covered repeatedly in the geopolitical sections, that we are moving to a negotiation for nuclear energy and powering all that energy in the Middle East. And we're having these final parts of escalations to hit a new era, which I've been covering constantly. We'll cover more in part 3. Well, anyway, UK is basically the beta surveillance, economic disaster. They're now looking at whether they're going to test wealth tax. To help you understand what that means, now I'm not saying it will happen, but there has been an exodus. The largest exodus of millionaires and billionaires is happening in the UK from anywhere in the world. They're mainly going to the UAE, where they can acquire assets in the UK on the cheap, because they're not going to be subjected to the wealth tax of the local people. What does a wealth tax do? It allows assets to be sold in distress, because those that are levered up have to sell their assets in order to pay tax. So if you implement a wealth tax in the UK, it means that every year you'll have to value your property or real estate and pay tax even though you haven't even sold it, which means you need to borrow against your real estate to lever them into the banking system, and you become a distressed asset for the bank's enslavement. It also means if you start a business in the UK, you would need to value your business every year, which is an incredibly hard thing to do, and pay a wealth tax on the value of your business in the UK, even though it's an illiquid asset that you can't sell. And so you'd have to borrow against your business in order to pay the tax. What about your Bitcoin in the UK? If they implement this, you'd have to take your Bitcoin, which they're now going to say you must disclose on your tax return, and then you'd have to sell some of your Bitcoin to pay your tax, or the government, basically means that anybody that has asset in the country like the UK will turn the entire economy into a collateralized debt obligation, which is why everybody is leaving, so that only the people that are enslaved by debt are left, which is what's causing more crime right now, while they also have immigration policies specifically designed to fuel racial and religious tensions, so that everybody says, why is this happening? Those immigrants are taking my job, when it's actually the proof of weapons network classical play managed by BlackRock as CEO, because governments are subordinate to their lobbyists. And that's exactly what's happening right now. UK is a complete beta test. Now, I don't actually think it will be happening. I don't actually think they would really turn UK into such a distressed asset, but nothing would surprise me considering what they're doing in Ukraine right now, where they're essentially profiting to the last Ukrainian because they compromised Zelensky in order to take the European Central Bank and Bank of England printed money in the proof of weapons network and buy all those weapons from BlackRock's portfolio company in the US. So US can print some growth and GDP while they profit to the last Ukrainian, and Zelensky constricts 18-year-olds and younger people to fight in a war they know they can't win. We'll be covering more of that in part 3. So they are losing in the UK millionaires and billionaires. And in fact, the data is actually showing that high-end real estate in London, through Chelsea, Kensington, Mayfair, is selling at like 40% discounts at the moment, because the wealthy people are selling in order to leave in case there is a wealth tax. And so you're getting corrections in the high-end real estate market in London, and it's probably people like BlackRock and their funds that are going to be able to purchase those assets, just like they're doing in the private equity market right now. This is what happens when you securitize and financialize all of your assets and opt into a quote-unquote democratic system where you're meant to be pushing democracy out there, when really the whole thing was just a ruse in order to end up with vassal states that are controlled by those that end up with all the capital as a result of the debt-based Ponzi scheme, which has got nothing to do with capitalism and everything to do with a scam called central banking. Which is the inevitable, predictable, and guaranteed result that I tried to warn everyone against in my 2011 book. Wow, 13 years ago, 13 years ago that was published. 14, yeah. Back to the Future, Protect Your Future Before Governments Go Bust. And by the way, if you want a free copy of that, make sure you head over to simondixon.com. Join for free the Bitcoin Hard Talk membership portal. I'll send you a newsletter with all these updates so you're protected, and you can get a free copy of that and lots of other content. We back it all up, just in case one day YouTube shuts me down here. Anyway, in order to protect yourself as a country, UK is selling its Bitcoin while US is meant to be buying Bitcoin. Remember, that was the promise of the Trump administration. Was so far, as I covered last week, the Bitcoin Strategic Reserve in US, poof, just disappeared from 200,000 to 28,000. There's been no updates on that. And the US Strategic Reserve is essentially becoming a Trump family strategic reserve, and a Steve Witkoff strategic reserve, and a Howard Lutnick strategic reserve. And so you need to understand that they're not MAGA. They're not making America great again. They're making themselves great again, and you should do the same as well. And that's what we always warned against. As long as you get Bitcoin in self-custody, don't listen to them, follow their money instead. And so no updates on the US Bitcoin Strategic Reserve. We'll keep following that story. Make sure you subscribe to my channel to get updates. Also, if YouTube ever takes me down, I also have this as a podcast on Spotify. Then you can watch it bit by bit, and you can download it and have it bit by bit. Also on Apple Podcast. And I also stream these on X, so follow me over there where I give real-time updates throughout the whole week that I consolidate into Bitcoin Hard Talk. And also follow me on Rumble because it's more censorship resistant. One of the largest shareholders is Tether, so we'll see where that goes. But also Bitcoin Hard Talk on simondixon.com. I've got my own infrastructure so I can back up everything in case it all goes wrong. So we're meant to be receiving a release from the White House this week. It's going to be a Bitcoin and crypto report That's going to come out on July the 30th. I'm not sure whether it will be covering any update on the Freedom of Information Act requests for where the Bitcoin Strategic Reserves Act is happening. But I'll make sure I cover that if there's anything interesting. And the Proof of Weapons Network financial terrorists decided to try and delegitimize the El Salvador movement that is trying to free itself from the Proof of Weapons Network that has done covert regime changes and guerrilla warfare by funding militias and gangsters in order to take over resources in El Salvador. And now President Bukele managed to essentially do a deal with the gangs and arrest those. And obviously they had to sign up to IMF debt. They launched the Bitcoin strategy, made Bitcoin legal tender, started building Bitcoin strategic reserves. They've been adding 1 Bitcoin every day. And the IMF tried to negotiate that if you want our money, because they didn't have enough Bitcoin, and if they had been more aggressive, maybe they could have freed themselves from the IMF. Instead, the IMF says you got to stop buying Bitcoin. Bukele put out a public announcement like he's still defying the IMF, and the IMF decided that they would expose El Salvador in a public interview. And we don't know which one is true because we can see on the chain that 1 Bitcoin is going into the El Salvador public address. But the claim is from the IMF is that El Salvador has not bought any Bitcoin since signing a loan deal with the economic hitmen at the International Monetary Fund. And so there was a recent public webinar with the economic hitmen financial terrorists at the International Monetary Fund. And it was asked whether El Salvador is still buying Bitcoin or whether they're just shifting coins between Bitcoin wallets from already purchased Bitcoin. And the IMF confirmed that El Salvador is simply shifting. And so either the IMF is lying or El Salvador is deceiving because it wants to continue the strategy, but it is being roped into the International Monetary Fund, economic hitmen, tools. And that is why you know that Bitcoin is a bigger threat than they want to let you know, because you can't trust a damn word that the International Monetary Fund says. And remember, Bukele and El Salvador had that big meeting with all the global South central bankers and finance ministers that were looking at also implementing Bitcoin strategic reserves, which freaked out the International Monetary Fund. And at the time, I went and met President Bukele to work on the Bitcoin bond, which suddenly went from having all the subscriptions to suddenly no longer being a project. At this time, I thought, do you know what? I'm just going to work with the people only to build their Bitcoin in self-custody and report on all these things that are happening, because really that was the original mission. And it makes me think, do we even want these governments protecting themselves with Bitcoin? Because really, it's about the separation of money and state, which was the original mission. And while countries can free themselves from the financial terrorists at the International Monetary Fund, we also have a trust me bro system with the governments as well. And so, look, I'm all for countries building these strategies, but recognize the real difference is a bottom-up movement where you own Bitcoin in self-custody rather than having a government own it for you. And I was on a space yesterday. Max Kaiser came up and he said that they've currently got $100 per Bitcoin per capita in the current system, but we can't trust anything. So I say, don't trust, verify. Is it the IMF? Is it the government? I don't trust either. And that's what Bitcoin was designed to do when it was really created as a bottom-up movement of us versus the banks. And so please, 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 the message is make yourself great again, because they're probably not going to make America great again, because they work for the Proof of Weapons Network. And it is a mafia. And in doing a deal with the IMF, you have to opt in to the economic hitmen and financial terrorists and the terms and conditions as they weaponize the dollar and they try and make the dollar more attractive globally, which perpetuates the debt cycle, the death and the destruction, the war and the violence that these covert operations happen as a result of creating a debt-based Ponzi scheme with the Federal Reserve at the heart of it that has now been used in order to co-opt to the very top of the proof of weapons network. So in part 2, this week in macro, I'm going to be covering the shenanigans and the theater that happened between Trump and Powell, who work for the same banks. And we're going to give some updates on what happened this week in macro. And I'm also going to leave you with a blog that I created today around the question, who really controls the proof of weapons network? And in the comment section, I often see people saying it's the Jews. And so people think when I'm saying the proof of weapons network, I'm talking about a Jewish conspiracy. So I'm going to finally debunk that, put it to bed, and help you understand the truth, because without truth, there is no peace. And so we're going to cover that in part 2 of this week in macro. While I'm grabbing a little bit of water and while we transition over to part 2 this week in macro, I'd like you to add a comment in this section, help me with the algorithm, and also hit the like button and share this with somebody else. And we're going to be back. We've got a lot more to cover with you this week in macro and who really controls the system. And we're going to be doing in part 3 this week in geopolitics, where I'm going to be going through the updates in China, Taiwan, Ukraine, Russia, and how you can fight back the system when you realize the government doesn't work for you. So let's move over to part 2 shortly.